Good morning! Let's continue with our lesson. Two sole proprietorships joined to form a partnership. Ito naman, pagka dalawang existing na sole proprietorships gustong mag-combine, paano? Same procedure tulad kanina. Same exact procedure, tama? You have 4 steps. Alright? With step number 2 being adjustments, yan yung may guidelines on how do you adjust, I should say. However, medyo mas mahaba-habang usapan itong isang to kasi dalawang libro ang kailangang i-adjust, i-update. So, yung mga accumulated depreciation account sa step 3, isasara mo din for, depende kung anong libro ang hindi, kung accumulated depreciation, isasara mo din kahit dun sa libro na gagamitin. So, I repeat, tulad ng nasabi na natin kanina, isasarado yung libro na hindi gagamitin. Hindi isasara yung book na gagamitin. Okay? Subalit, whether gagamitin yung book or hindi, kailangan ma-adjust silang parehas at kailangan maisara din yung accumulated depreciation na contra asset accounts. Alright? So, pwedeng gamitin yung book ng isa, sara yung isa, o baliktad, or pwedeng parehas silang isara at magbukas ng entirely new set of books yung partnership. When two sole proprietorships join together to form a partnership, the union can be accounted for by using either of the two options. Partnership will use the old books of either of the two or new set of accounting books tulad ng sabi natin. In either option, the steps followed in the first illustration will also apply. So class, let us recall the 4 steps. Balikan lang natin for a while. Okay? Number 1, all nominal accounts should be closed. Dito sa ating unang illustration, wala nang pinakitang nominal account. Tama? Kay Binin at kay Carlos. So, nalibre ka na dito sa first step, sa first illustration. Alright? Number 2, nag-adjust tayo. Number 3, clinose natin yung accumulated depreciation account. Number 4, ni-record natin yung investment ng incoming partner, which is Carlos. Close nominal accounts, adjust, close depreciation account, accumulated depreciation accounts, I should say, record the investments. Remember those procedures as your teachers when they ask you, okay, to make adjustments to prepare. If they ask you to deal with comprehensive problems, those are your guiding steps. So, balik tayo dito. We now go to the illustration. Miss Mega, owner of Mega Agricultural Supply, and Mr. Gamol, owner of Gamol Agricultural Supply. So, alam mo na, pag nag-combine sila, anong labas? Tama? Are friends yet are competitors. On December 31, 2020, the two decided to unite their businesses to form a partnership to avoid undue competition. Their partnership shall be called Megamall Agricultural Supply. Both agreed on the following adjustments of their assets before the combination. Number 1, so we have here 6 adjustment data. Allowance for doubtful accounts should be 8% of the accounts receivable balance. 2. Merchandise inventories of both parties should be valued at 110% of their book values. 3. Office supplies of Mega Agricultural Supply should be valued at 110% of its book value, while the office supplies of Gamol Agricultural should be valued at 90% naman of its book value. So yung number 1, accounts receivable through the allowance. Number 2 is the merchandise inventory. 3 would be the office supplies for land should be valued at 150% of its book value. 5. Building of Mega should be valued at 30%. Rather, 30% depreciated daw dapat yung building. Furniture and fixtures of Mega Agricultural Supply is considered fully depreciated with no scrap value, while that of Gamol, so furniture and fixtures, fully depreciated. Si Gamol naman considered 40% depreciated. Anyway, later on class, babalik-balikan natin yung mga yan on a per item basis. So una, allowance for doubtful accounts should be 8%. 100% of accounts receivable balance. In our book, we have presented here the statement of financial position for Mega just before the union. Ganon din naman for Gamol Agricultural Supply just before the union of the two sole proprietorships. So, dun sa taas, kay Mega, ito yung kay Gamol. So, what we have done in order to make our discussion smoother, hiniwalay natin to a separate sheet so that later on, hindi tayo balik ng balik dito sa dalawang balance sheets na ito. Okay? So, let us continue for now. First option, books of one of the sole proprietorships will be used as partnership books. Patulad ng sabi natin, there are several options. The first of those is this one. Pwedeng gamitin mo yung kahit na alinman dun sa dalawang libro na existing na. Namely, either the book of Mega or the book of Gamol. So once again, to recall the things that we have said the previous meeting, ang sabi natin, yung libro na hindi gagamitin, isasara. Okay? But, lahat yung dalawang libro na yon, both the books must be adjusted. Kaya gagamitin or hindi, they must be adjusted. Pero yung hindi gagamitin, necessarily, isasara. Yun namang libro na gagamitin, isasara mo din, pero yung accumulated depreciation lang. Alright? And aside from that, alright, yung hindi gagamitin na libro at na-adjust na, ipapasok mo ngayon as an investment doon sa gagamitin na libro. So, we will illustrate all of those dito sa problem na to. If we opted to use the books of one of the proprietorships, the following must be observed, sabi natin dito. First, tulad ng sabi natin, adjust the assets of each of the proprietorship books to reflect their fair market values or the agreed upon values by the partners. 2. Close the books of the proprietorship if this will not be closed. 3. Transfer the adjusted assets, liabilities, and capital of the closed proprietorship to the books that will be used by the partnership. So sabi dito, assume that Mega and Gamol agreed to use the books of Mega. So ang gagamitin kay Mega. So pagkatapos ng lahat ng procedures, pag-adjust, pagsara, okay, ipapasok mo lahat ng mga adjusted balances ni Gamol, papasok doon sa libro ni Mega, okay, as the investment of Mr. Gamol. Kasi nga, yung libro ni Mega ang gagamitin natin. In implementing the steps above, the following would be presented. Ito yung papakita natin in solving the above scenario. First, adjust mo silang parehas. Kay gagamitin or hindi, adjusted dapat parehas. Based on the adjustments, present adjusted balances by making a new statement of financial position. This is not necessary, but in order for us to be able to look at the entire picture of what is happening, we prefer to present a balance sheet for each company, alright, before the combination but after the adjustments. So, gagawa tayo ng balance sheet for Mega and Gamol after the adjustments. Next, number 3 na ipe-present natin. I-close mo lahat yung kay Gamol, close everything since this book will not be used. Pero dito kay Mega, ang i-close mo lang yung accumulated depreciation na account title dun sa related asset account, right? Next, so na-close na yung kay Gamol, ipapasok mo ngayon siya doon sa libro ni Mega tulad ng sabi natin. So enter the investment of Gamol in the books of Mega which is represented by the adjusted balances of Gamol Agricultural Supply. Ayun yun. Okay, so let's now go to the adjustments. Kung natatandaan mo kanina, yung ating adjustment number 1 ay patungkol kay allowance for doubtful accounts ng accounts receivable. Ang sabi ay 8%. So we now go to the balance sheet before the adjustment, before the union of the two proprietorships. Ito yung ating balance sheet na tinutukoy. So if you have the means, please screenshot this one para may reference ka at hindi tayo balik ng balik later on dun sa isang sheet. So ilagay na lang natin siya sa isang sheet. You have here accounts receivable of 500,000 for Mega and 150,000 for Gamol. So kung 8% nga ba? Balikan nga natin. Yes, 8% daw dapat nung accounts receivable ang allowance. So let us see. So 8% of 500,000, that must be 40,000. So take note, meron nang nakaset up dito na 20. Alright? Dito naman, kay Gamol, 150,000, 8%, it must be 12,000. Take note, may nakaset up na dito na 110,000. So remember again, the guidelines in adjusting assets. Kung meron daw contra asset account, dun ka dadaan and you must not directly adjust the asset. O dito, may nakaset up na allowance. So yung 20 doon, kulang pa. So dadagdagan natin. That is why our adjustments for Mega and Gamol should be as follows. Credit allowance for doubtful accounts para maging 40 yung 20. And syempre, ang kapartner niya would be 20,000 capital. Tulad ng sabi natin sa discussions the last time. Okay? Dito naman, the allowance for doubtful accounts is supposed to be 12. May nakaset up na 10. So 2,000 ang idadagdag debit Gamol capital. We are now okay with adjustment number 1. Let's go to adjustment number 2. For adjustment number 2, merchandise inventory of both parties should be valued at 110% of their book values. Okay, so tignan natin kung 110% dapat yung merchandise inventory. This is 600,000. Palakihin lang natin ng konti. Ayan. So kung 600,000 class times 1.10, it is 660. So dapat may dagdag tayo dito na 60,000. Dito naman, 400,000 times 1.10, that must be 440,000. So may dagdag tayo dito na 40,000. Dito ay 60,000 naman. Therefore, our adjusting journal entries should be as follows. Debit, merchandise inventory na 60 para madagdagan. Credit the capital account. Dito naman sa kabila, debit din, merchandise inventory. Credit the capital account amount of 40,000. Next adjustment. Number 3. Office supplies of Mega agricultural supplies should be valued at 110% of its book value while the office supplies of Gamol should be 90%. Okay? Balik tayo dun sa ating balance sheet. Ilan ba ang nakalagay kay Mega at kay Gamol? Kay Mega, ang office supplies ay 30,000. So, dapat daw 110%. So, 30,000 times 110% or 1.10, that must be 33,000. So, may dagdag dapat dito na 3,000. Dito naman, 90% na lang daw dapat yan. So, 90% of 20,018. So, dapat may bawas dito na 2,000. Let's see our adjustment. Debit office supplies para madagdagan, credit the capital account, debit the capital account, credit the office supplies kasi dapat mabawasan ng 2,000. Ito sa number 3 kay Gamol. Alright? Next, so okay na tayo sa number 3. We go to adjustment number 4. Land should be valued at 150% of its book value. Tignan natin yung ating balance sheet. Alright? Sino lang ba ang may land? Parehas pala silang may land. So, 900,000 and 600,000. The valuation must be 150% of the book value. So, 900,000 times 1.5. That must be 1,350,000. Anyway, class, may solution naman dyan sa baba, dun sa ating libro. However, siyempre, pinapakita natin sa'yo kung paano nakuha yung mga figures na pinapakita dun sa solutions. So, 1,350,000 less 900,000. The land account of Mega must increase by 450,000. Ito naman kay Gamol, 600,000 times 1.5, that must be 900,000. So from 600,000 gagawin mong 900,000, dapat may dagdag na 300,000. 450 and 300,000. Okay? Journal entry for number 4 to adjust. Debit land 450, credit capital. Debit land 300, credit capital for Gamol. 300,000 also. Let us now go to number 5. For number 5, building of Mega should be 30% depreciated. Building of Mega. So, patungkol lang kay Mega ito. Tignan nga natin, ilan ba yung building ni Mega? Mega has 500,000 buildings. So, if it must be 30% depreciated, 500,000 times 30%, it is 150,000. So, dapat yung accumulated depreciation 150. May nakaset up na 120 dito. So, dadagdagan lang natin ng 30,000 yung accumulated depreciation. Okay? Patungkol lang kay Mega itong adjustment na to. Therefore, there would be no journal entry in the books of Gamol. Okay? While dito naman kay Mega, dadagdagan dadagdagan mo ng 30 yung accumulated depreciation. And as we have said, ang kapartner ng adjustment mo lagi yung capital account. For number 5, 30,000. The last one, number 6. Furniture and fixtures of Mega Agricultural Supply is considered fully depreciated with no scrap value, while that of Gamol is considered 40% depreciated. So wala na daw dapat yung furniture and fixtures nung kay Mega and 40% kay Gamol. Let us take a look. Okay. Full depreciation means that the accumulated depreciation equals the cost of the asset already para maging fully depreciated. So yung 80 dito, dadagdagan mo ng 20 para yung accumulated depreciation na 80 maging 100 din. Dito naman kay Gamol, 40% depreciated daw. So 200,000 times 40%, that must be 80,000. So dadagdagan natin ito ng 30,000 naman. So 20 and 30. Our adjustment should therefore be debit, capital account, credit, accumulated depreciation, furniture and fixtures. Okay? 20,000. Debit, Gamol capital, 30,000. And credit, accumulated depreciation, furniture and fixtures, 30,000 also for Gamol. So we are done with the 6 adjustments. Lahat ng mga yan, simple entries, po pwede mo daw gawan ng compound journal entry. This one is for Mega. The computations that we have done are shown here in our book. It's just the same tulad nung ginawa natin. Alright? Para lang smooth yung discussion, pinakita natin yung kung paano nakuha yung mga amounts. Ganun din kay Gamol. Po pwede daw nating i-compound entry. Alright? Tignan mo na lang dyan. Computations also followed here dito sa ating baba. Same as the amounts we have computed. The capital account of Gamol serves as the balancing amount in the compound entry. Kung i-T account mo nga naman, siya din lang ang lalabas. Yung correct balance of the capital accounts for Mega and Gamol. Tulad nung sinabi natin kanina, we would also be presenting statements of financial position after the adjustments to show the balances before completely combining the two proprietorships. Ito yung ating nasa libro. We have put this also in a separate sheet kasama nung balance sheets kanina. So, eto na yun, class. Yung pinapakita natin kanina were the balance sheets before the adjustment and before the union. Etong papakita natin ngayon after the adjustments but bago natin siya ipag-combine. So, dahil ginawan natin siya ng ganitong balance sheet, if you have the means, please take a screen capture of this one para mas madali on your part later on. These are now the adjusted balances incorporating yung mga adjustments na pinakita natin kanina na 6. Okay? So yung ating allowance for doubtful accounts, 40 na siya dito. That is already the adjusted balance. 20 na din siya dito. That is already the adjusted balance. So kung ipapakita natin uli yung ating unadjusted balance sheet kanina, alright? Makikita mo dito, 20 pa lang, 10 pa lang din siya doon. So these are all the adjusted balances after those 6 adjustment data. Okay? Cash, 320. Accounts receivable, 500. 40,000 for 60. Merchandise inventory is now 660,000. 33 yung office supplies for a 1,473,000. 200,000, 150, 120, 138,000. Merchandise inventory is now 440. Office supplies is 18,000. Total current assets 796. Okay? Non-current assets, land also adjusted. Lahat na to adjusted. The accumulated depreciation accounts also adjusted already. Total assets 3,173,000, 1,816,000 for Gamol Agricultural Supply. Ito pala yung kay Mega. Okay? Liabilities and proprietorship, I think there were no adjustments here. So 500, 673, 516 and 300. Tignan natin yung before adjustment. Correct? There were no adjustments sa portion na to. So 1,173,000, 816,000, 2 million for Mega, adjusted capital, and 1 million naman for Gamol. So, ipapakita natin, okay, we'll now go back to our book. Ayan, na pagka nga naman ginawan mo ng T account, yung mga adjustments, beginning with the unadjusted balance, that would equal the adjusted balance na 2 million at 1 million na pinakita natin kanina. Okay? So let us try doing that. This is a T account for Mega Agricultural Supply. Ilan ba yung ating beginning or unadjusted for Mega? Ito, 1,557,694 for Gamol. Okay? For Gamol, it must be 694,000. So incorporate lang natin lahat ng mga adjustment. Okay? For number 1, naka-debit si Mega Capital ng 20, so de-debit mo din. Naka-credit ng 60, so let's credit also. For number 3, naka-credit uli ng 3,000, so i-credit mo. For number 4, naka-credit uli ng 450,000. For number 5, naka-debit ng 30. And for number 6, naka-debit ng 20,000. Checking the balance of this, it must exactly be as shown 2 million pesos. Kay Gamol, same procedure also. For number 1, naka-debit yung capital, 2,000, so di-debit mo din siya dito. Okay? Naka-credit ng 40, tapos debit ng 2,000, credit ng 40, debit ng 2 or 20, 2,000 for adjustment number 3. And number 4, naka-credit ng 300,000. Alright? For number 5, no entry. And for number 6, it is a debit of 30,000. Okay. So checking the adjusted balance of this T account, it must be exactly 1 million pesos as stated in our balance sheet after the adjustment. Okay. 2 million and 1 million pesos. Alright? Okay, class. So that's the bell already. That's it for this meeting. So, ganun-ganun lang, class. A few minutes of your time every day, imbis na kung ano-ano yung pinapanood mo, just make it a habit to watch our videos bilang tulong na rin dun sa sarili mong pag-aaral. Why? Kasi tatandaan mo, hindi lahat ng nababasa mo ng mag-isa ay maririnig mo. At hindi din lahat ng mga naririnig mo ay mababasa mo. Tulungan yan. So with that, see you in our next meeting. See you in the next lesson.